Welcome to Talk Tickers. Today we're taking a deep dive into AstroNova's Q2 fiscal year 2026 results. They just came out.
That's right. And there's a lot to unpack here. New CEO just started, product transitions underway, some financial adjustments.
Definitely. So we'll break down the numbers, look what management's focusing on, and flag the key things that could really shape where AstroNova goes next.
Exactly.
Okay, let's start with a snapshot. Q2 FY26. And the headlines, well, they paint a bit of a tough picture. GAAP EPS came in at negative $0.16. That's a pretty big swing. Management pointed out themselves on the call.
Yeah, they did. And the revenue numbers, they followed that trend.
Yeah.
Total revenue was $36.1 million.
Okay.
That's down 10.9% from the same time last year, which was $40.5 million. And it was also down sequentially about 4.3% from Q1.
And margins.
Also felt the pressure. Gross margin dropped 310 basis points compared to last year, landing at 32.2%.
And that flows down, right? Profitability took a hit.
Big hit. Adjusted EBITDA was basically cut in half. Came in at $2.1 million. Yeah, so the margin there was just 5.7%.
Okay, 5.7%. And I imagine the market noticed that during the call.
Oh, yeah. Pretty clear reaction. Reflected that, let's say, less than stellar performance.
All right, so let's peel back the layers. This is where it gets interesting. What's happening underneath those headline numbers? Let's start with the segments. Product ID.
Product ID revenue was $24.8 million. That's down 8.9% year over year. Operating margin there was 7.7%.
Okay. And Aerospace. Heard that fared worse?
It did. $11.3 million in revenue, which is down 15.1% compared to last year. And operating profit in Aerospace dropped 37%, down to $2.4 million.
15%.
Wow.
Now, the new CEO, Jorik Ittmann, he stepped in right before this, August 15th. What was his take? He was pretty blunt, wasn't he?
He was. Called the results disappointing, straight up.
Right.
And he stressed, an immediate focus on turning around product ID. Said they need to rebuild customer relationships, create more urgency, more accountability inside the company.
Interesting. Rebuilding relationships. That implies they were maybe neglected.
Yep. That's the implication, yeah. And it does raise that question, can new leadership actually turn this around quickly? It's a big ask.
And he's making structural changes too, right? Shaking up the sales team.
Yes, exactly. Reorganizing sales into two teams. One focused on customer acquisition, getting new business, and the other on customer retention, keeping the current ones happy.
That's a big shift from how they used to do it.
It is. And he linked it to the products. He noted the sales cycle for their newer, higher value printing systems is much longer.
Okay. So selling those needs a different skill set than, say, their older tabletop printers.
Precisely. Takes more time, different conversations. He also mentioned some production hiccups with their mill and sheet flat pack printer line. Said they've struggled to meet demand even though feedback's been good.
So production issues on top of longer sales cycles. What about the new products themselves? Any progress there? The QL-425, the AJ800.
Yeah, some positive updates there. They started shipping the redesigned MTEX-based presses, the QL-425 and QL-435. And in August, the AJ800 direct-to-packaging solutions started shipping too.
Okay, so products are moving. What about Aerospace? The ToughWriter.
They started shipping the ToughWriter 640 to a major OEM. That's their newer flight deck printer. The goal is for ToughWriters to be over 80% of their flight deck printer shipments by the end of this fiscal year.
80%, up from what, about 50 now?
Yeah, about 50% currently. So, credible product steps forward. But the challenge clearly is execution, converting that into sales, getting production smooth.
Execution, always the key. And this all flows into the outlook, which wasn't great either.
No, they had to trim that too. For the full fiscal year 2026, AstroNova cut revenue guidance, now expecting $149 million to $154 million.
Down from
$165 million previously.
Okay. And EBITDA margin.
Also trimmed, now guided to 7.5% to 8.5%, down from 8.5% to 9.5%. So definitely resetting expectations for the year's profit.
A clear reset. Now, connecting this to the bigger picture for you listening, the financing side is pretty critical here too, isn't it?
Very significant, yeah. After the quarter ended, they amended their credit agreement. And importantly, that included a waiver because they breached a covenant.
Which one?
The fixed charge coverage ratio covenant.
Okay, so basically their earnings weren't quite covering their fixed debt payments and obligations as required by their lenders.
Yeah.
That's not ideal.
Not ideal at all. It's a sign they're under pressure financially, and they're actively trying to address it. They're in talks right now to refinance into a real estate-backed loan.
And the timing on that?
They said within the next 60 days.
So soon.
Yeah. It's crucial for them, especially given their leverage. They're sitting at about 3.5 times funded debt to adjusted EBITDA.
3.5x. So managing that debt and getting this refinancing done is key for liquidity and, just keeping the lenders happy.
Absolutely. It impacts their interest costs going forward, too.
Okay, so putting it all together for you, the investor, what did the market make of all this? You said the reaction was pronounced.
It was. Shares dropped sharply right around the call, down over 10% intraday at one point, actually touched a low around $10 flat.
In dollars. And volume was high.
Volume spiked, yeah. Way above normal. Clear signal investors were reacting strongly.
So the market's skeptical. Discounting the product ID turnaround, maybe? Worried about the financing?
I think it's all of that. Discounting the timing of any product ID recovery, definitely uncertainty around the covenant waiver, the refinancing. Management talked about modest second half revenue growth, but the market's clearly weighing that against the immediate problems and the lower guidance.
And how has AstroNova been doing compared to benchmarks anyway?
Not great lately. Over the past year, the stock's total return is actually negative 31.4%. So it's been underperforming.
Oof. Okay, what about the wider industry? Any context there that helps explain these struggles?
Well, in their product ID market digital labels, packaging, you're seeing these elongated capital cycles.
Meaning companies are holding on to their big, expensive printers longer, delaying upgrades.
Exactly. Makes it tougher to sell those new higher ticket machines AstroNova is rolling out. Execution becomes even more critical.
And Aerospace. You mentioned tough comparisons.
Yeah. Long term, more planes being built should help. But this quarter, they were up against some unusually large orders from last year that didn't repeat. So the year-over-year decline looked worse because of that.
Got it. So overall sentiment feels cautious.
Definitely cautious. Look, they have the new products, that's clear. But they need to prove they can execute, get the sales momentum going in product ID, and resolving the financing situation. That's the big near-term thing to watch. It affects everything.
They are cutting costs, though, right?
They are. Mentioned $3 million in annualized cost reductions that should fully hit in the second half of this fiscal year. And longer term, there's a Honeywell royalty that rolls off in fiscal 2028, which could help margins down the line. But that's still a ways off.
All right. It's time. Our This Is Not Financial Advice segment, where we cook up an outrageous, but maybe, just maybe plausible, trade idea based on everything we've just discussed.
Oh, okay. Given the stock hitting $10, the debt talks, the mixed signals, yeah, this definitely feels like fertile ground for a high-risk, high-reward idea. What have you got?
My pitch. A super tight, short-term, leveraged long play. Basically, a buy-the-dip catalyst strategy.
Whoa, okay. Go on.
The stock hit $10. It's hovering just above that now, maybe $10.15. The catalyst is that refinancing. If they announce it's done successfully within that 60-day window.
The one backed by real estate.
That's the one. And if we get even just a little bit of positive news, some qualitative validation on those new MTX or AJ800 printers shipping, maybe a customer quote in a press release.
Okay.
Then you could potentially see a short squeeze or at least a decent bounce off these lows. The market might have overreacted to the guidance cut.
So you're betting purely on those near-term events, the financing getting done, and maybe some early positive spin on the new products, catching the absolute bottom.
Exactly. That's the outrageous part. Betting the market overshot to the downside and these near-term catalysts, maybe just weeks away, could spark a relief rally.
Aggressive.
Totally. You'd need an extremely tight stop loss, maybe just under that $10 low, and you'd be targeting a move back towards, say, $11.50, where it was before the earnings drop, maybe higher if the news is really good.
It's pure event-driven speculation, basically, ignoring the lowered full-year outlook for a potential short-term pop.
Precisely. Acknowledging all the risks, microcap stock, the sales cycle issues, execution challenges, they're all still there. But playing for that quick relief rally if the catalysts hit just right.
Definitely fits the outrageous but plausible bill, and absolutely not financial advice.
Okay, and that wraps up our deep dive into AstroNova's Q2 fiscal 2026 earnings call. Look, it's clear the quarter threw up some major challenges, revenue down, profits hit hard.
Yeah, you've got new leadership actively trying to reset things, change the sales approach, get these new products really rolling.
The path forward really hinges on execution, doesn't it? Proving they can deliver on the product refreshes and, critically, getting that debt refinancing sorted out.
Those are the absolute key things for you to watch. They'll dictate performance and how investors feel about the stock going forward.
And remember, as always, this is purely for informational and educational purposes. Definitely not financial advice. Do your own research, Talk to a professional. Hopefully this deep dive gives you a good handle on the situation.
Thanks for tuning in to Talk Tickers. We'll talk to you next time.
So here's something for you to think about. AstroNova's juggling, right? Customer trust, product rollouts, financing deadlines. If you had to pick just one as the absolute first domino that must fall correctly for any turnaround to work, which would it be and why?